Most of Australia's big banks have reported record profits, but that growth could be under threat. So, what does that mean for customers and shareholders?
Well, SBS Finance editor Ricardo Goncalves joins us now with the details.
Janus Bank profit reporting season has ended today with a record $7.8 billion cash profit from Westpac. Combine that with the other multi-billion-dollar profits from the Big Four, and total cash earnings came in at nearly $30 billion. So, why are they lifting mortgage rates independent of the Reserve Bank? 9 months after taking over from Gail Kelly as Westpac CEO, Brian Hartzer has walked into a massive record full-year result.
My first priority was to make sure that we maintained our momentum.
Cash profit rose 3%, driven by loan growth. It will pay a full-year dividend of $1.87 per share.
This meets our goal of steadily growing dividends, although the growth has slowed as a result of the need to build capital.
That need to build capital is a requirement by the banking regulator.
So the regulatory environment is forcing the banks to scale back their dividend payouts.
And it's not helping bank shares either. The Big Four are down more than 20% since their recent peaks as they tap the market for more cash to shore up their reserves.
And definitely, as a large component of most investors' super fund, it's in everyone's best interest to have safe banks.
It's not just investors paying the price, but mortgage holders too, who've had to endure out-of-cycle rate increases.
We've tried to strike a balance.
Westpac argues Australians can afford interest rate rises with mortgage rates at a near 50-year low, while 74% of its customers are ahead on their mortgage repayments.
So our customers are in good shape.
And it's still writing home loans despite fierce competition, which is squeezing margins across the industry.
Since the change we've made, we haven't seen any material impact. In fact, we had an incredibly strong September, and application volumes have continued to be quite strong.
Building approvals continue to rise, according to the Bureau of Statistics today, but house price growth is moderating. CoreLogic RP data says values fell in Brisbane, Perth and Darwin last month. The other capitals rose, but the gains in Sydney and Melbourne are only small. The easing housing market, along with the potential for higher US interest rates and a more positive outlook on Australian employment, gives the RBA more time. But
the inflation number this week gives them an excuse to move if they really did want to move.
We'll find out just before tomorrow's Melbourne Cup race.